Hey, good morning, everybody. So this is going to be the watch list for Monday, September 9th. And let's go ahead and start with the economic news. Next week, for the most part, anything that's going to drop is going to happen before the market opens. Not too concerned about wholesale inventories or consumer credit on Monday. Tuesday, optimism index. Again, that'll drop before the market opens, so we'll know sentiment before we start to get any direction one way or the other. The big numbers are going to be Wednesday and Thursday. The CPI numbers. So again, consumer price index, the CPI, the inflation, the core CPI. These are going to be ones that we're going to want to see how the market digests this. Is inflation still coming down or is it ticking higher? Same thing on Thursday, jobless claims. This will be an important one to watch. This is what set off the sell-off on Friday, were the unemployment numbers and the number of job openings created compared to past history, which was considerably weak. So the concern is that inflation is not the problem, but that job creation is starting to slow. And when it starts to slow, it typically then turns to layoffs. Layoffs turn to higher unemployment. And then you don't get a soft landing, you get a hard landing. So they literally sold into the news pretty heavy on Friday. Now, mind you, September is the worst performing month of any month throughout the year. So typically the indexes are down 3 to 3.5%. Now we've already started to see that correction within the very first week. So will it continue as we progress, or will it start to stabilize, bounce higher, and then fall further down? The question that's now hinging in the market's mind is, does the Fed lower rates by a quarter or a half? Now, if it's a quarter, pretty much all things are okay. Yep, we're on track. We're moving in the right direction. If it's a half, are they getting concerned that they waited too long to start to lower rates, and therefore it's no longer going to be a soft landing, but a hard landing? So a lot of the consensus is now going to be around what does the FOMC do and how do they balance the delicate situation they're in. Thursday, we're also going to get the PPI year over year. So that's the producer price index. So think about that this way. When it costs producers more to make something, who do they pass that on to? The consumers. So we're going to hear from the consumers first, and then we're going to hear the producers the following day. And then Friday, you're going to have some import news that's going to come out, and then consumer sentiment. So again, these will be pre-market. The one to watch for is this consumer sentiment number at 10 a.m. So 30 minutes into the market open, probably don't want to be into a trade. The other thing I've noted too is the majority of all of my trades are not happening until 30 minutes until the market is already open. There's just too much volatility and too much wicking. And then there's also a lot of days where there's nothing good to trade here. So unless you can see a defined trend or you're at a price level, my advice is don't take a trade. So let's take a look at a couple of the indexes where we're at. I have removed some of my lines up top here just to keep the charts open and clean. You will note on SPY, we have a daily gap that has still not filled down here below. Okay. So the prior gap that was here filled on Friday. That was just quite a market sell-off. You can see this over the last couple of days. They try to push it up, sell it off, try to push it up, sell it off. They don't even push it up and they just sell hard into it. So my next target is going to be most likely, could we get a bounce? Yep. But it's going to be to the downside to fill this gap. Again, just knowing the weakness in the month of September, directionally, this is most likely where we're headed. And then do we find some stability around this 533 number? If not, 528.60. So let's go ahead and take a look at this on the 4-hour. Pretty much exact same thing. We're between zones. So my zone is 533 all the way up to 543. That's a huge zone, right? But we have this gap fill. And then you could see what we're doing here is we are stabilizing between the zones, but I think we're probably headed toward the gap. We're below the 9, we're below the 21. The yellow is the 200 simple moving average. So if we lose this, that's when the market will really start to get concerned. Let's take a look at this on a 1 hour. Pretty much same exact thing. Not much going on here. We're between zones, just chopping back and forth on a 1 hour time frame. I definitely would wait and give the market a little bit of time to open. Oh, you know what? One more thing we should take a look at. Just if we're going to bounce, where would I look at that from? So I'm going to take a fib level from the low to the high. You'll see that we are still approaching the 50% retracement. So I would watch this 537.24 to see how does this hold. And then if we fail this, definitely a gap fill. And then we start to go down to the 533 and then to the 618, which is the 550 fib level. So I think those are good ones to keep an eye on. Let's go ahead and take a look at the same thing with QQQ. The Qs, I already have my fib levels on here. So you'll see we have a gap fill up above. That's kind of irrelevant at this point in time, right? But you'll note we already failed the 50% fib from this pivot low to this pivot high. We are now approaching the 618 at 447. If we don't bounce here, I think we're definitely heading down to the 436 level. Let's take a look at this on a 4 hour, pretty much same exact thing. I don't have anything good for it to bounce off of. You'll note on this candle here on August 8th, we did bounce off of this 436 level, which is why I think it's crucial. But if we fail this 447, I would just be patient, see how we approach it in the pre-market. Do we start to dip below it? Will we hold it, or do they reclaim it and then start to move higher? But if we start to move higher, I still think that we are going to have a hard time getting back above this overall supply zone, which this huge candle here, I would be looking to go short right around this area here from 448.59 to 460. I know it's kind of a wide zone, but I think if you watch this, if we do reclaim this and head higher, I think what we do is we come down to here and then we end up here and then we're going back lower, okay? Now, if we can't hold this fib level, then I think it's just going to be an easy straight shot for us to just head down to the 436. Let's take a look at a couple of individual names. So the ones I do like, and I called this out last week, I think was United Airlines. So what I like about the airlines, again, I don't ever want to own them, but they're good to trade. So what do we know about the airlines? One, demand is still strong. The one that I like the most is probably going to be Delta Airlines. Why? We're still holding this trend line, okay? What I would love to see is for us to come down to this 200 SMA. We still have some room here. And then last point of contention is going to be down here at about maybe $41. So we're talking about a 50-cent move. Not a lot, right? But keep an eye on this one. And then I do think that we have an opportunity to bounce higher. The reason I think we have an opportunity to bounce higher, even though the market move was pretty brutal on Friday, right? There was a lot of indecision. Pretty much we opened and closed at the same level, but look at the volatility within this. It moved all the way up to 43.05. I mean, a dollar move on a $40 stock is going to give you a really good return on an options premium, okay? So why do I like the airlines? Well, a couple reasons. Fuel costs are coming down. Oil just closed, I believe it was below $70 a barrel. We're now in the 60s. That is good news for airlines, right? Think about it. What's the greatest expense airlines have? Jet fuel. Fuel prices are now back at a 12-month low. So I think there's some room to run here in the airlines. The other one I'm going to be watching are the banks. I think they sold the banks off way too hard. The Fed's going to be cutting rates. We know they're looking for at least 100 basis points, and the one that I'm watching is Citibank. I think it has really good upside potential here. You'll note it was trading all the way up here at $67. We're now at $60, so that's a 10% haircut. But look at how we have been bouncing off of this level in the past. So if we can hold 58.69, I think there's some room to the upside. If I would also, let's go ahead and take a look at this on a 4-hour chart and just see where we're at from a fib level perspective. So we will take this panic news on Japan and we will take it right here. If we fail, my line in the sand, which is 58.66, 58.11, again, is another area to watch for a bounce. We had some prior consolidation here. So you could see this. It was consolidating on a 4-hour time frame before we eventually moved higher. And then again, just the negative sentiment with the jobs report brought us back down, but it's the same level we were at over here. So I do like this to the long side. Okay. Let's take a look at Exxon Mobile, because I was already just talking about fuel costs. So fuel has come down dramatically, yet the oil stocks are really holding in there. So Exxon would be another one. Where would I look to go long is probably down here on this pivot at about 110. We're only $2 away, but that's still a 2% move on a $100 stock. All in all, I think there's some potential here that if oil recovers in price, that we could start to move higher. You'll see that we are in a ton of overall demand for the buyers that are sitting here, and they're very heavy at this level. Okay. So I think that's why there's some potential to the upside with Exxon Mobil. Let's talk about the elephant in the room for the last week, 2 weeks, right? Nvidia. Been selling off pretty darn hard. I think there's still probably more room to the downside. Do we get a bounce here? Yeah, possibly, right? You could see that the buyers bought this up on the last move down, which was about $98 a share. I think if we get down to this $98, you could definitely play this one for a bounce to the upside. But then if we fail the 98, I think we're definitely going down to the $90 range. And then if we break that, there's definitely more room to the downside. And we'll just have to see how they fare out with semiconductors. The reason this one is probably a better short than a long is that everybody who bought up here at 140 or bought at 130 are now trading at 100. So they've already lost 25% of their value for those that are like, and I hate when people say this, oh, just buy the dip. You know, okay, great. You bought the dip and lost 25%. Buying the dip is not a strategy. Let's look at where the overall demand is on this. The demand is right here in this zone. But what I will tell you is when you're looking at demand zones, this is a 1 hour, a 30-minute, and a 45-minute demand zone. Those are very, very weak zones, okay? So even though we are in demand where there are buyers, with the sellers being this strong, they will keep selling into these buyers until they eat them away. If you start to see this stock approach $100, okay, and it doesn't hold, that's when it's going to hit the fan, because people are going to get extremely nervous that it is going to 90. Once these buyers are eaten up, okay, the next level of buyers are all the way down here at $90. So there's no reason to be buying if you're in this zone. It makes absolutely no sense. Now, can we come into the zone and move higher? Yeah, of course you can, right? There's nothing to say that the market can't do that. Would I think that that's going to be probable? No, I think we're going to wait till we come all the way back down here for the value investors to say, I'm not catching a falling knife. Okay, so that's what I would be watching on Nvidia. And then the last one, there's a news event coming out this week, Apple with their new iPhone. So Apple's been holding up better than everything else, but even on the supply and demand indicator, it's only a 30-minute zone, so it's fairly weak. So if we fail this on Monday, based upon the fact that the iPhone announcement isn't sexy or there's not a ton of news, I think we're definitely heading lower down here to about 217 into where we have more of the buyers. Or if the news is good, again, if you look at the sellers, the zones are relatively weak, right? We have a 2 hour, a 30-minute, a 45-minute, so we could definitely push higher. I would think that we would, again, bounce higher, but these are some big red candles coming to the downside. Push higher and then look for a short to go lower of buy the rumor, sell the news, right? And that's what the market loves to do. We love to buy the rumor, okay, and then sell the news back down to overall support, and then maybe you'll get a bounce higher. But if we push up even more significantly, I would definitely be looking to probably take a reject up here at this 220 level, this is again going to be a pretty wide zone, right? 224, somewhere up in here where we just get these wicks where they're trying to keep pushing it higher and they hold it until ultimately they failed it and then they failed it again. So kind of a wide area, a lot of consolidation here. So this is where I think we'll start to have some problems, is right in this area right about here. So 222, 223, again, you can see where the sellers are sitting, push up, head lower. And that's kind of what I'm watching. Again, give yourself some time when the market opens. Just sit and watch. There's no need to force a trade or take a trade until you understand the overall market sentiment and where things are heading. If you're interested in the supply and demand indicator, this is by one of the analysts that I've been following for about 4 years, Bryce. It's really nice because I don't have to do a ton of charting. I just turn it on or off. I'll put the link below in case you're interested. And then if you do go out and get it, let me know. And I have a setup video that is excellent that will walk you through how to use it. So with that, have a fantastic week and we will all talk later. Take care.